My greetings to everyone. I am Professor Namita Rajput, Professor in Department of Commerce, Sri Aurobindo College, University of Delhi. In the ongoing series of corporate governance, today we will be talking on important issues relating to corporate activism, shareholder activism and the related aspects. So now we are going to discuss about the shareholder activism intersects with the ESG issues. The first and the foremost is engagement and advocacy. The shareholder activism often engage with the companies on ESG related issues through a dialogue, advocacy and the shareholder resolutions. So they may push for a greater transparency, disclosure and accountability regarding the environmental impacts, social policies, diversity and inclusion efforts, human rights practices, board diversity and executive compensation and other ESG considerations. The next is your proxy voting and the shareholder resolution. The shareholders use their voting power to support and oppose the management proposals and the shareholder resolutions related to ESG issues. The proxy advisory firms may provide the recommendations to the investors on the voting decisions influencing the outcome of the shareholder votes on the matters like climate change initiatives, sustainability reporting, board diversity, executive pay linked to ESG performance metrics. Now, integrating of ESG factors into the investment decisions. The shareholder activist and the institutional investors, they are increasingly integrating the ESG factors into their investment decision making process to assess the long-term risk and the opportunities associated with the company's ESG performance. The activist may divest from the companies with the poor ESG records or advocate for changes in the corporate policies and the practices to improve the sustainability, social impact and the governance standards. The next is your impact investing and the shareholder engagement. Some activist investors pursue the impact investing strategies that seek to generate a positive social and environmental outcomes alongside the financial returns. They may engage with the companies like the shareholders to promote the sustainable business practices, responsible supply chain management, community engagement and the ethical conduct. The impact investors often collaborate with the other stakeholders including the NGOs, policy makers and the industry peers to address the systemic ESG challenges and drive the positive change. The next is your litigation and the legal advocacy. The shareholder activist may resort to litigation or a legal advocacy to address the environmental and the social concerns like the climate change, related risk, pollution, labor violations and the human right abuses. There is a litigation which can also be used to hold the companies accountable for the ESG related misconduct, seek the damages for a harmful caused impact to the shareholders or compel the companies to adopt certain more sustainable practices. Now, there is a shareholder activism in the environmental, social and the governance issues. So, now we will be discussing about the stakeholders collaboration and the multi-stakeholder initiatives. The shareholder activism in ESG issues often involves collaboration with the other stakeholders including the NGOs, advocacy groups, industry associations and the government agencies. So, there is a multi-stakeholder initiative like sustainable coalitions, ESG task force and the industry partnerships which may facilitate the collective action to address the systemic ESG challenges and promote the industry-wide best practices. So, overall, the shareholder activism in ESG issues, they play a very important role in promoting the corporate responsibility, sustainability and the accountability by leveraging their influence as the shareholder activists contribute to the integration of ESG considerations into the corporate decision making, advance the responsible business practices and drive the positive social and environmental impact across the industries. So, the shareholder activism, they often target the executive compensation as the key area of concern, aiming to align the interest of the executive with those of the shareholders and ensure that the compensation packages are very fair, reasonable, and also linked to a long-term performance. So, let us now discuss that there are some shareholder activism which intersects with the executive compensation, like performance-based pay. The shareholder activism advocates for the executive compensation structures that is tied up with a significant portion of the executive pay to the company's performance matrix, like the financial targets, stock price appreciation, operational benchmark, and ESG criteria. So, the performance-based pay, it aligns the executive incentives with the shareholder interest, incentivizing them to focus on delivering a sustainable value creation rather than the short-term gains. Say on pay votes. Many jurisdictions, it requires the public companies to hold say on pay votes, allowing the shareholders to express their views on the executive compensation packages. The shareholder activist may use these votes to scrutinize the executive pay practices, voice their concerns about the excessive or unjustified compensation, and advocate for the changes to the compensation policies and the practices. The next is your equity ownership guidelines. The activists often push for the executive equity ownership guidelines that require a senior executive to hold a significant portion of their compensation in company stock or the stock-based incentive. The equity ownership aligns the executive interest with those of the shareholders by ensuring that they have been vested interest in the company's long-term success and the share in both the risk and the reward of the ownership. Then we have a clawback provision. The shareholder activist may advocate for the inclusion of a clawback provisions in the executive employment contract or the compensation plans. The clawback provision allows the companies to recoup the incentive-based compensation from the executives in the event of the financial restatements, misconduct, or other circumstances that warrant the forfeiture of the compensation. The next is your transparency and disclosure. The activists push for greater transparency and the disclosure regarding the executive compensation practices, including a very clear explanations of the rationale behind the compensation decisions, benchmarks used for the comparison, peer group analysis, and the alignment of pay with performance. The enhanced disclosure helps the shareholders evaluate the reasonableness and the executive of the compensation policies and hold the companies accountable for their decisions. The next is your engagement with the compensation committee. So, basically the shareholder activist, they engage directly with the compensation committees of the corporate board of discuss the executive pay practices, express the concerns, and advocate for changes. So, by fostering a dialogue and the collaboration with the compensation committees, the activists seek to influence the compensation decisions, improve the governance practices, and ensure that the executive pay is aligned with the shareholder interest and the company's performance. The next is your benchmarking and the best practices. The activist may advocate for benchmarking executive compensation against the industry peers and the best practices to ensure that the pay levels are competitive, reasonable, and reflective of the market conditions. By comparing the compensation practices across the companies, the shareholders can assess whether the executives are being fairly compensated relative to their peers and the company's performance. So we can say that the shareholder activism in the executive compensation, it aims to promote a greater accountability, transparency and alignment of interest between the executives and the shareholders. So by advocating for performance-based pay, equity ownership, clawback provisions, enhanced disclosure and engagement with the compensation committees, activists contribute to the adoption of compensation practices that incentivize the long-term value creation and foster the shareholder-friendly governance. So let us now discuss certain case studies of successful shareholder activism campaigns that have resulted into a very significant changes with the target companies. So we will be talking about the Pershing Square versus the Canadian Pacific Railway. In 2011, activist hedge fund Pershing the Square Capital Management, led to the investor Bill Ackman, launched a campaign to oust the CEO of the Canadian Pacific Railway, citing the poor performance and the operational inefficiencies. So, Pershing the Square successfully replaced the CP's entire board of directors with its own nominees, including the appointment of the Hunter Harrison as CEO. So, under the Harrison leadership, CP underwent a dramatic turnaround, improving its operational efficiency, reducing the cost, boosting the shareholder returns. So, by 2015, CP's stock price had more than tripled since the start of the Pershing Square's campaign. Another case study is about the Nelson Peltz versus the Procter & Gamble, that is P&G. In 2017, activist investor Nelson Peltz and his hedge fund Trion Fund Management launched a proxy battle against the consumer goods giant Procter & Gamble, that is P&G. The pelts around the P&G bureaucracy, sluggish growth and the lack of innovation were hindering its performance and the shareholders' value. After a closely contested proxy fight, the Peltz narrowly won a seat on P&G's board of directors, becoming the company's first ever activist board member. So Peltz, present on the board, pushed the Procter & Gamble to accelerate the cost-cutting initiatives, streamline its product portfolio and focus on the core brands. So the company's stock price subsequently rose and its performance improved. In 2019, activist hedge fund Elliott Management, led by a billionaire investment Paul Singer, disclosed a significant stake in eBay and launched a campaign calling for a strategic changes. The Elliott proposed spinning off eBay's classifieds business and implementing the operational improvement to unlock the shareholders' value. So eBay agreed to appoint 2 new independent directors to its board, including one nominated Elliott, and announced the plans to explore the strategic alternatives for its classified business. Now, the case studies of the successful shareholder activism campaigns. Now, following this Elliott's campaign, eBay stock prices surged and the company initiated a strategic review process for its classified units. Now, we have discussed about 3 case studies, and all these case studies illustrate how the shareholder activism can drive the positive changes within the target companies, leading to the operational improvement, strategic realignments and enhanced the shareholders' value. So, by leveraging their influence as a significant shareholder and advocating for the changes in the corporate governance strategy and the operations, the activist investors can actually play a very transformative role in shaping the trajectory of the companies and delivering the returns for the shareholders. The shareholder activism can actually indeed contribute to the long-term value creation by encouraging the companies to focus on the sustainable growth, strategic investments, and the responsible governance practices, rather than pursuing a short-term gains at the expense of the long-term sustainability. Now, we will be now discussing about how shareholder activism can support a long-term value creation for the company. The first and the foremost is that focus on the strategic initiatives. The shareholder activism often advocates for the strategic initiatives that prioritize the long-term value creation, like investments in the research and development, innovation, product diversification, and the market expansion. So, by encouraging the companies to invest in their future growth and competitiveness, activists support the sustainable value creation over the long term. The next is your governance reforms. The activist may push for the governance reforms that strengthen the oversight, enhance the transparency, and align the management incentives with the shareholders' interest. By improving the corporate governance practices, the activists help mitigate the agency conflicts, reduce the risk of managerial opportunity, and foster a culture of accountability and a reasonable decision making, which is very conducive to the long-term value creation. The next important aspect as far as the shareholder activism and the long-term value creation is concerned is about the alignment of incentives. The activist campaigns often target executive compensation practices to ensure that the management incentives are actually aligned with the shareholder interest and the long-term performance goals. By advocating for performance-based pay, equity ownership guidelines, and a clawback provision, the activists help incentivizing the executives to focus on driving the sustainable value creation rather than short-term profits. The next is your strategic realignment. Activists may advocate for the strategic realignments like the mergers, acquisitions, diversities, spin-offs to unlock the synergies, streamline the operations, and optimize the capital allocation. So, by challenging the status quo and pushing for the strategic changes, the activist also helps the companies adapting to changing the market dynamics, seize the growth and opportunities, and enhance the shareholder value over the long term. The next is your environmental and social responsibility. The shareholder activism in the environmental social governance issues encourages the companies to adopt the responsible business practices, mitigate the environmental risk, promote the social inclusion, and uphold the ethical standards. So, by integrating the ESG considerations into their strategies and operations, the companies can enhance their resilience, reputation, and the long-term competitiveness while creating a value for the society. The stakeholders' engagement. The activists often engage with their stakeholders, including the companies, customers, suppliers, and the communities, to understand their perspectives, address the concerns, and build the trust. And by also fostering a positive relationship with the stakeholders and considering their interest in the decision making, the companies can enhance their social license to operate, mitigate the risk, and the sustainable create the value over a long-term period. The next is your resilience and adaptability. The shareholder activism can actually help the companies become more resilient, adaptable in the face of disruptive forces, technological advances, regulatory changes, and the market uncertainties. By the challenging complexities, promoting the innovation, and driving the organizational change, the activists contribute to the company's ability to navigate the changes and seize the opportunities for the long-term growth and the value creation. So, we can say that the shareholder activism can play a very, very constructive role in promoting a long-term value creation by advocating for the strategic initiatives, the governance reforms, incentive alignment, responsible business practices, stakeholder engagement, and the organizational resilience. So, by challenging the companies to think and act with a long-term perspective, the activist can help create a sustainable value for the shareholders, stakeholders, and also the society as a whole. So, we can say that the stakeholder activism is primarily very important aspect, and if we focus on the important aspects as far as the shareholder activism is concerned, it is going to increase the strategic value, the long-term value, the long-term gains, and in order to attain that, we should focus on the strategic initiatives which is going to actually root for us the overall performance of the company, the sustainable performance of the company, and the shareholder activist. They actually prioritize this kind of a value creation rather than the short term gains and the value creations. We actually advocate, as far as the shareholder activists are concerned, for the long term development of the company, innovation, product diversification, and the market expansion, which is definitely a part and parcel, and the focus is on the strategic initiatives rather than the short term goals. So, we can say that by encouraging the companies to invest in their future growth and the competitiveness, the activists, they have to support the sustainable value creation over a long term period of time. And also the governance has to be re-looked upon because the activists, they are actually concerned about certain pertinent and important issues, like they are very much bothered about the transparency part, the overall alignment part, the whether the interest of the shareholders are met or not. So, all these aspects, they are covered under the governance reforms, and the activist, the shareholder activist and the shareholder activism plays here a very vital role, because they are going to have certain reforms in this direction, which is definitely going to strengthen the company's the alignment processes, the strategic processes, and the by result and the byproduct of this is that the interest of the shareholder is prime and their concerns are also looked upon. So, by improving these kind of governance practices, the activists, they have to mitigate the conflicts at large. They have to actually work as a team to actually inculcate a culture of accountability, responsibility, and decision making which is very responsible, which is not having a shorter vision but having a longer vision about increasing the long term value creation of the companies. So, these strategic issues are also important, and also we are talking about the governance reforms. So, if these two are teamed up together, the day is not far that the company is going to have certain long term benefits having these kind of strategies in the center. So, by improving the corporate governance practices, we are able to mitigate the conflicts, we are able to increase the opportunities, we are able to foster a culture which is more responsible, which is more accountable, and which is going to result and divert the company onto a path of success, and the long term mileage is there. So, basically also we talk about, when you talk about the shareholder activism and the long term value creation, we also talk about the alignment of certain incentives. If they are not in place, then there is a problem. So, the activist, they actually the activist campaigns, they often target the executive compensation practices to ensure that the management incentives are aligned with the shareholder interest and the long term performance goals. Sometimes there is a big issue in many of the companies where the shareholder activism is there, that they are very unhappy about the compensation packages of the top management, and they feel that they are not aligned with the shareholder interest. So, we have to maintain a parity between the two, we have to maintain a balance between the two, and these campaigns, they often target that neither the compensation of the top management should be excessively high, and also the shareholder interest should not be overlooked. Both these things are also very, very important for the long-term sustainability and the long-term performance goals of the company. So, by advocating the performance-based pay, the equity ownership guidelines, the clawback provisions, the activist they focus on driving a sustainable value creation rather than the short-term profits. So, these strategic realignment, these aspects have to be revisited, re-looked upon in order to attain the long-term value creation of the companies. We also talk about some strategic realignment. The activists, they have to be strategically realigned in terms of going into mergers, going into acquisitions, going into spin-offs, going into synergies, going into streamlining procedures, going into short cutting of the cost, then moving on to a very, very optimum capital allocation structure. So, these kind of strategic realignments are also considered very, very important for the value creation of the company. And at the end, we can say that we need to challenge the status quo. We need to move on from a position of equilibrium onto a very, very different environment where the strategic changes take place, where the activists are actually helping the companies to change the market dynamics, to actually have disruptive innovation strategies, to seize the growth opportunities which are available in the companies, and last but not the least, we have to enhance the shareholder value creation, which is actually over a long period of time. So, the shareholder activism in environmental, social governance issues, it encourages the companies to adopt certain responsible business practices, decrease the risk, increase the inclusion, and uphold the ethical standards. Thank you very much.